for that point, it is a true warehouse of wealth that he's in control. And I always ask the question, like, if you believe what I believe, the wealthy have more choices. And you listeners that, listening in the car or wherever you are at the gym, do you believe that's true? Like, do you believe what Jeremy and I believe is true, that the wealthy have more choices? And that's one of the strongest things to emphasize about your own privatized system. Because when you take a loan from the bank, you have a PLOC, a HELOC, a credit card. They want a structured repayment.
Yeah.
Like, banks are really good at making money.
They want their money and they want it now.
They want it now. They want it consistently. They want it persistently. And so when it's your bank, that is the blessing. And it's also can be the trap if you don't have good habits. Hey everyone, welcome back to another episode of Wealthwise Banking Podcast. Today's episode is going to hit home in a very real way. Jeremy, how are you, man?
I'm doing great. Been enjoying the time here with you and Patty and your family down in Orlando. And when you talked about this guy's message to you, I was like, we got to get this and discuss it because I'm sure he's not the only one.
He's definitely not the only one, right? And we received this week actually from one of our clients that's a government employee who's currently furloughed because of the shutdown. And this is what his message said. Hey man, I just want to say thank you for helping me set up my whole life. I was able to take a new loan and it will cover me during the government shutdown, allowing me to pay off the bills and provide a Christmas for my family. Keep up the great work and know you're helping so many people. And so for me, that message says it all. When uncertainty strikes, like a government shutdown, like you lose your job, position, you get hurt, having control over your finances isn't just smart, it's essential.
Yeah. And, right now, millions of Americans, a lot of them are feeling kind of the same impact that he is, right, during the current shutdown. It started in October. So we're in October 2025. Today I was recording is October 30th. And right now, weeks in, over 750,000 federal workers have been furloughed, and about 730,000, well, they're without pay. That's about 1.5 million people in the workforce today, Jason. And that message, he's not, like I said, he's not the only one. So just think about that. Their paychecks are being missed. The bills are piling up. It's October. We're about to go into the holidays. It's fast approaching. So this shutdown, what we want to get in this episode, this is not a political episode, right? But this is personal. And while Congress can't figure out what's going on, we want to help people take back control and be prepared.
And I love that, if you're talking 1.5 million Americans, and there's so many other Americans that aren't working for the government that might or are going through the same thing. And so when millions of Americans are feeling the impact of the shutdown, that you just mentioned in the numbers and what's happening, there's a way that they can be prepared and they can have a different feeling about life. Mm-hmm. They're going to undo that when you're the leader of the family, like this gentleman who wrote in, he's looking to provide, to protect, to give certainty to his family. But what gives certainty to him? What gives certainty to him is being prepared, is building something that is going to be there when he needs the support because he's the one providing that support.
Yeah, stability and certainty when life gets uncertain, right?
100%. So give us some of what are we going to talk about and cover in this episode today?
Yeah, so we're going to get into a little bit about how our favorite system, our asset, builds a lot of stability in their personal system, all right? This isn't just another payment, it's your personal vault. And one of the things I want to discuss as well with you is creating that manageable floor as well as the meaningful ceiling. A lot of times we talk about the meaningful ceiling, but during uncertainty and uncertain times, we have to have that manageable floor as well that protects us in tight times and provides strength during uncertainty. We're also going to discuss why guarantees matter when the government pay and markets and jobs cannot be counted on. And then stick around to the end because I want to discuss with you a little bit about house rules on when to borrow, how to do it, as well as creating security and self-reliance during uncertain times.
Yeah, it's brilliant. I mean, it's brilliant that, again, one thing I always ask you, and you didn't know when this was coming, but I kind of believe that you knew it was coming. Jeremy, there is one guarantee in life. What is it?
Change.
And all our listeners, you knew what the answer. You're all saying in your head, Jason, no, it's death and taxes. No, it's change. And change is always either a blessing or a lesson. So how prepared are you for that moment when it comes? When the system fails, when you think you're showing up to work every day, you're putting in your 40 hours, your 50 hours, your 60 hours, and you believe that, hey, I'm doing what I'm supposed to do. And then someone else decides, well, sorry, we've got an agenda, we got things that need to be done. We need to leverage it affects people in a real way. And this is why that you don't want to give up control to someone else.
Hmm.
So even when you're an employee, you want to have a means, you want to have a system, something that you actually control that gives you guarantees.
So that message that you got, Jason, what was your member actually saying when he wrote that out to you?
Say that one more time.
So he sent you that message of gratitude and the peace and security, the peace of mind that you helped him give, right? So what was his message? What did it really mean?
It really meant thank you for provide to me. Thank you for helping me create a system that gave me protection. Thank you for taking care of me. Thank you for making sure that when the government's not taking care of me, there's something else in my life that will.
Yeah, he correct, right? He didn't have to beg or borrow for a paycheck. He had that certainty that he could rely on and be the provider he needed for his family.
And so, like his message, like you just said it all. It said, when the system fails, self-reliance becomes survival. And that's what that message meant. Like I just laid it out for you is that he's prepared. I talked about it before we came on. You're either proactive or reactive in life.
Hmm.
And millions and millions and millions of Americans are reactive because that's the system that has been built and we've been groomed and we've been taught to be reactive. When we need something, where do we go? Typically, like when we need something, like if he didn't have this system, like let's just play the other side. If he didn't have this system,
Oh, yeah.
if he didn't have this system, where is he going to make sure he can still provide Christmas and take care of his family?
Credit cards,
Credit cards. And
debt.
but who specifically is controlling that?
Well, not him. I think that's what it really comes down to is he's not in control. It doesn't really matter who's in control if it's not him.
And my point being, it's the system, the banks. It is somebody else. And why does that create stress in the long run? Because all of a sudden he goes from feeling like, hey, I'm not able to provide. Like, and everyone that's listening, if this resonates with you, just think, put yourself in his situation. Like your income completely stops. You're no longer able to do the things like just the basic things, going and buying your family food, providing the power, electricity. Now you get the holidays coming up. All of a sudden, as a man, you're like, what do I do? What do I do? And then you go to the banks and then you take a credit card and then you are all of a sudden you get back on your feet, but now you're under what? You're under a mound of debt that you owe other people more money just to provide the basic things.
So you're in a stressful situation, took on debt that created future stress. So all you did is you kicked the can down the road, and your present self will have to deal with it in the future.
And so why is this system, why Family Bank? Like why does Family Bank work so well? And this wasn't his plan, by the way. Like I
Hmm.
helped him build this plan. The plan was to start both of his kids' policies this month
Hmm.
before the year ended. The plan was to use that liquidity to do some other things in his life. So what my message is there is, again, what's guaranteed? Change. But when life changed for him, guess what? He has his system. He has his own privatized system. So why does this work so well when the paycheck stops?
Well, your cash value keeps compounding even when you borrow against it. There's no application or credit approval process, as in no one's coming between him and access to his capital, right? So he also controls when to borrow and how to repay. Let's say that government shutdown, we don't know when it's going to end, but that doesn't mean that there's going to be a creditor coming and knocking on his door. He's in full control of the entire system. So your member's safety, that safety net for him, it doesn't depend on anyone else, right? And this isn't a bill. Like this is a warehouse of wealth, truly is what it is.
And for that point, it is a true warehouse of wealth that he's in control. And I always ask the question, like, if you believe what I believe, the wealthy have more choices. And you listeners that, listening in the car or wherever you are at the gym, do you believe that's true? Like, do you believe what Jeremy and I believe is true, that the wealthy have more choices? And that's one of the strongest things to emphasize about your own privatized system. Because when you take a loan from the bank, you have a PLOC, a HELOC, a credit card, they want a structured repayment.
Hmm. Yeah.
Like banks are really good at making money.
They want their money and they want it now.
They want it now, they want it consistently, they want it persistently. And so when it's your bank, that is the blessing, and it's also can be the trap if you don't have good habits.
Mhm.
But now if you are able to pay it back in an unstructured way, meaning you have a windfall of money, guess what? You can pay your loan back, you can fill up that bucket to use it again.
Mhm.
But I'm talking about the control. Like that's what my message is when you are going to them, to the people over there to bail you out and not to your own system, you're giving up control.
Well, liquidity does what? Liquidity buys you time. That time is what gives you peace of mind, really. But let's go into this too. He still has his premiums. How do we
Yes.
structure this for additional safety, additional security for him?
Man, what a good segue. I mean, you must be a professional at this podcast thing, huh? That is brilliant. Like this is why we talk to people and we talk about a manageable floor. Like if you're watching, you see my hand down low, like at my chest, and a meaningful ceiling. And now we're going up high. Like what is the big goal? What do we actually set this up for in the long term? And that manageable floor is that number where like, even if I'm furloughed,
Mhm.
even if I'm laid off, even if I'm injured, you know what? I've got this. I know I can go do X, Y, and Z and still be able to put money into the policy.
Mhm. Yeah, so your banking policy in and of itself, it should breathe with your life, right? You have it there that's light in the lean times and strong in the stable times. And that's kind of that security that we've been talking about. For what does this mean like really in practice though? So let's get rid of like the jargon. Let's get down to like the brass tacks. How does this work? Define what is a manageable floor.
Yeah,
Just
let's do it number wise. Let's just
okay.
do easy numbers. So like if your premium deposit's $1,000 a month,
Hmm.
your manageable floor is probably going to be somewhere around 310 or $410 a month, depending on the design.
Right. And why is that important?
It's important because that is what is the cost of insurance that keeps the policy alive, and you have to know that has to stay in the policy.
Hmm.
Like think of it that way. Like the other money that's going in, the additional money in that $1,000 is what's building the cash value. It is for the banking purpose. The whole part of it, the base, the manageable floor, they're all synonymous. But that is what has to stay in the policy. That is what's going towards the guaranteed death benefit, and it's also providing the long-term growth.
And in terms of structure, that floor is also what also it affects your dividends. So that manageable floor, that base premium that Jason's alluding to, that affects the long-term growth. It's not like it's gone. You will get it back in the form of dividends.
Yeah, and the bigger that is, the bigger your dividends are
Hmm.
going to be, the more, depending on the carrier, sometimes you can even add additional money back into it. So it isn't like it is providing massive value. And that's a great, great point. I hear what you're saying, I hear what you're putting down. You're saying, hey, Jason, when people come to us and they're asking for, they want something that's going to provide high liquidity right away, we can do that.
Hmm.
But we're also talking, we're helping you escape your natural inclination that you want your cake and you want to eat it too, and you want everything to happen now, and you don't want to think long term, which is the exact opposite of everything we teach.
Hmm.
Is that what I kind of heard your message from you?
Yeah, a little bit, but it's also people are thinking, I don't want folks to lose sight that the manageable floor is just the cost of insurance. Like it does build its own cash value over time. It builds a lot of it through the dividend. Like that base premium is what drives the dividend.
And let's talk about the meaningful ceiling for a second. So we just wanted to establish that base, that cost of insurance, while you don't have access to that money in the first 2 years, guess what? That is driving the dividends who give you more paid up additions, who in the long run gets you to your efficiency point, meaning a dollar you put in, you have a dollar coming out.
Mhm.
You get to the point faster of, every dollar I put into the premiums, I've gotten back tax free.
Mhm.
Like that's page 85 in Nelson's book, right? The quote. I say it every day, so I think I got it, but it's the second paragraph, and it says, if you knew at passive income time that every dollar you put into a system came back tax free, would you hesitate to put more in?
No, I wouldn't.
No. And the answer is always no.
Yeah.
Sometimes people look at me really perplexed and they think, is this a trick question?
Mm.
Are you trying to trick me, Jason? And let's talk about the meaningful ceiling.
Yeah. So the meaningful ceiling is it's really there for the good times. And we talk a lot about the meaningful ceiling. I've used, examples in the past of how I use it for real estate, but the government will recover. I do believe in the US economy. We will recover. So, how do you put that money back in? Well, that's the meaningful ceiling. It's there for bonuses, refunds, side hustles, right? Um, all that windfalls of money that you can have that comes back into your system. You have that breathing room. We have the manageable floor that's there, the minimum in order to keep the policy alive.
Hmm.
The ceiling is what's there for all the good times, and that builds the early liquidity.
And that's your when you say warehouse of wealth, that's how you store more of the cash that's flowing in. Because again, like over a 10-year period, I was talking to a farmer the other day, someone who listens to us regularly, so you know who you are. But you told me this is how farming works. And I think this is pretty true across all professions. We have 2 years when you can't do anything wrong, where everything's going your way. Like it's like whatever you're selling, whatever you're putting out, the crops are good. Everyone needs what you're selling. It is gangbusters. Then you have 2 years where nothing is going right,
Mm,
where everything, you're furloughed, your crops are producing one-fourth of what they did the year before. Like that was the example.
wow.
Like per square foot, we're making one-fourth what we did a year ago
Mm.
because of weather, and so you all of a sudden you're like, okay,
Feast and famine.
we have these we have these really, really high times, we have these really, really low times, and then we have 6 years where we're in the middle. And so what Jeremy is telling you with the meaningful ceiling is if you're putting in the manageable floor for a period of time, these carriers, these large mutually owned companies will let you catch up
Hmm.
when you're feasting.
Yeah.
So now you're not just feasting buying BMWs and cars and toys and things, you're replenishing the system that got you through the famine.
Yeah. This is all about building that vault to withstand volatile times, right? That's what this is.
That's it. And it's so simple. Like somehow every week we're coming back and we're talking about changing one thing and following the first law of wealth of paying yourself first. And now we're just showing you the importance of being proactive. This is something, the family banking system, the privatized banking system, your specially engineered whole life is something that, again, is going to breathe with your life. Like you said, feast or famine. It's light in the lean years, strong in the stable ones. And this is something where you're setting this up if you're setting this up over time to to really be there for when you need it. And what if you're just starting this out? What if this is new or you're struggling or maybe you're just hearing about this and you're furloughed. You're
Hmm.
one of the 1.5 million furloughed or working for free or whatever it is right now.
Well, that's where we start with a sustainable floor, right? Something that you can maintain even during income gaps. You can add that ceiling, right, when life stabilizes, back to your other point. But we focus really on the habit and the practice of banking, not necessarily on the dollar amount. I think it's more important that people get started than try to create a perfect banking system. Your system's going to grow with you over time, no matter what. And we'll be able to be there, to help guide that growth. There's a reason I have multiple policies, the reason you have multiple policies, right?
Yes.
Our system continues to expand over time.
And if you're listening, like I love the quote, you either think you can or you think you can't, and either way you're right. But Jeremy, this is something that's a reality for anyone listening, and this happens to all of us on a daily basis, right? Gap or game. What if someone's just in that survival mode and they're having this conversation or this thought and they think, I can't do this. Like this is impossible. Like I'm barely getting by. What would you tell that person?
Well, if that's your belief, then to your point, you're right.
Yeah, you are right.
You are right. So we do structure.
But then how
There's
would you break that pattern? Like how would you help someone start moving towards believing that there is something better?
the first thing we got to do is start on the mindset, and that is you are in control of your wealth, no one else. Like you cannot be relying on the government, you cannot be relying on Uncle Sam, your job, your employer, whoever it is. At the end of the day, the buck stops with you. And I think that's really the turning point, and probably the biggest hurdle for most people is the acceptance and realization that they are the ones that are in control of their system.
I
They're the
love
ones
it.
that are in control of their wealth.
I love that radical ownership, right?
Yeah.
Radical ownership. Like if it's meant to be, it's up to me.
Hmm.
And so that brings me back to why I was asking you the question. We want to focus on the habits. Like if you're not able to pay yourself and save now when you're just surviving, then you're not going to do it when you're wealthy.
That's true. Man, think about all the wealthy athletes that are out there who've gone bankrupt, or the lotto winners who've gone bankrupt. Money doesn't solve problems. It's the habits.
It's the habits. It's the habits, and it's the habit of you get paid, you follow the first law of wealth, you follow the laws of wealth, and you're going to pay yourself first.
So that really segues into kind of house rules for borrowing, right? So let's talk a little bit about how you borrow, how it is that you structure your wealth over time. If you had someone that wanted to take a loan, for instance, um, if how what would be some structures or rules or something like that you'd put in place for borrowing?
I mean, you want to, well, let's borrow first with a purpose. Like what is I always think about when someone asks me, like even when they're building their next system, I just want to give you the power of a question, okay? They say, "Hey, can I do this?" Like I'm talking to someone later today that wants to build their pool and they want to use their policy.
Okay.
So we're going to have a very real conversation of like, why is that important to you? Like really tell me what is this bringing to your life that it's really got to help you hit your outcome, and we want to help people stay focused. We're not saying you can't want what you want, you can't have what you want, but when times are lean, when times are going gangbusters, then you don't want to borrow from this just for a lifestyle moment,
Yeah.
right? You want to have a plan to repay that. You want to have a plan for whatever you're going to keep your system strong, and you're going to keep it sustainable over that period of time.
Yeah. So every loan has to have a clear need, right? So whether that's going to be for growth and opportunity, or in this case, survival.
That's it. And it's simple. It's simple that you want to have, like you said, you want to have a reason why you're taking it, and you want to have a plan for paying it back. Like, how are you going to refill this? Are you going to set it up in a structured way to pay yourself back? Do you know, like in the employee who sent us this awesome message, are you going to replenish it once you're back to work? Because like talking to him and talking to other government employees, they know that they're going to get back pay.
Hmm.
And so where do they store the back pay when they get the back pay?
Well, it should go back into the policy to repay those policy loans to be there again during the next uncertain time. Because to your point, what's inevitable in life?
It's change. And we looked this up. I mean, the government shuts down every 2 to 3 years, right? So every 2 to 3 years, if you're a government employee, it's change. Like think about if you're a farmer, you have 2 bad years. Like it's cyclical. Everything in life is cyclical. Style is cyclical. Everything's cyclical. So being prepared is is the way that you can have certainty and provide that leadership for your family.
Yeah. And I would also say document your decisions, right? This is going back to the money habits, like good money habits. If you're going to be taking policy loans, document it. Not only do you want to have a clear need, but you want to document what it is that you did and why, and have that repayment plan that's in place as well.
And a plan.
Mhm.
That's simple. A plan. It doesn't have to be complex. You don't have to be super smart to do this. You just have to know that like Jeremy said, when you're taking a loan, it has to have a clear need, right? Whether it's survival, a debt bridge, a family expense, something that maybe it's an opportunity. And then you want to have that repayment plan. You want to set them out. You want to make sure that you have a timetable. You have a way that you're going to pay it back and a time frame, like set the time frame. And then we also let's talk about keeping a liquidity floor.
Oh, this is huge. So before we ever go into looking at using these policies as opportunities and growth, I always say the very first place you should have is 6 to 12 months, right? Worst case, 3 months of liquidity built up. If you go back to our origin story, why did I start teaching this to people?
Mm.
It was because of COVID.
Mm.
Literally COVID. People didn't
I
have
forget
enough
that
money.
somehow, man. I don't know why, but I forget that.
Yeah, people didn't have enough money to get through the hard times. So the government started printing capital and devaluing the dollar. So I always say start with an emergency liquidity floor, right? 3 months, 6 months, ideally 12 months, because as COVID shown, it may take 12 months to get back on your feet.
You know what our emergency liquidity floor has become? Just this is something I just thought of just now, is our emergency liquidity fund is the amount of premium deposits that I intend or have put aside to put into our policy every year.
Well,
Like that is mine because I know when it goes in the policy, if I need it, it's there.
exactly. It's there when you need it, and the way that you want it. You don't have to jump through hoops. There's no underwriting, no permission. Like you're in full control. You have full radical ownership of your banking system.
And the plan is always to go out to serve, to create more value, to have way more than that liquidity floor that we need to keep. I like to know, hey, I'm putting X amount, I'm putting 31% of what we earn annually into our policies. And that makes you uncomfortable,
Mhm.
right? Like that was an uncomfortable amount, but we think ahead. It's like, okay, well, we know that 70% of those premium deposits, we do them annually still, is coming up between today, actually Saturday, and the 23rd of December.
For your personal system.
Yes,
Yeah.
not really a good time to do that, is it? Pretty epic stupid. That's why I want to bring up, make a little fun of myself. But these are why we guide people to think about these things because I didn't. I was just solving problem, the problem, the problem.
Hmm.
And then I look at the result and I could switch to monthly. I could change how I'm making my premium deposits, but I've already committed to myself and it makes me uncomfortable. And that's the point I'm getting to. It makes me uncomfortable to do that amount, but it forces me to look at everything I'm doing and really have a guiding question. Is this adding value or is this subtracting? Is this something that we don't need in our life or is this something aligned with our vision?
Well, what's also nice is your entire system does have a manageable floor, right? So if capital or hard times or something did come into place, you still have that sustainability piece to keep things sustained in the bad times and growing during the good times.
And so what are some of the and I think we covered everything, right? The meaningful ceiling, the manageable floor, really being having certainty in uncertain times. Let's talk about let's kind of wrap this up. Like when the system stalls, payroll, politics, public programs, the certainty becomes priceless.
Oh man. Yeah, it does, doesn't it?
It's something that we all need. You need certainty in your life and you want to be in control of your life. And guess what? If you haven't created a system like this and uncertainty comes, you're going to feel out of control.
Hmm.
It's that feeling of freedom.
Yeah.
It's not actual freedom, it's the feeling of it because you feel like you're in control.
Again, liquidity gives you time. Time gives you peace of mind. You don't have to rack up debt. When we build out your manageable floor, that survives the storm, right? The meaningful ceiling that we talk about, that grows during recovery. This is a vault, and that vault is there that you can trust when everything is delayed, that you're in full control. It's not about growing faster. It's really about providing and being stronger.
And what you're talking about, those key points were in a properly structured whole life policy, right? That's put together by someone that is a certified infinite banking practitioner, someone that builds banks for a living for folks like you who need some more certainty, who want to have a meaningful future that you're in control of.
Yeah. So, Jason, for people who are affected by the shutdown, what can they do today?
Well, I mean, the first thing I would do is really start asking yourself, what do you want? But if you're talking about how they can continue the conversation, book that personal liquidity session with us at wealthwisebanking.com. This is how we're going to help you build a short-term survival plan, but that's going to lead to your long-term vision.
Hmm.
Right,
Yeah.
Jake?
Yeah. So, we're going to help you design a vault that meets you where you are today and plans not and provide security not just for the uncertain times, but also the long-term growth. And again, your banking system will expand. The control of your capital will expand. And to this gentleman's point, he's going to the holiday season and he's not worried anymore. Like he has the ability to provide for Christmas, but he also has the ability to pay his bills today.
No, his feeling is certainty. His feeling is abundance. His feeling is love. Like I can go and provide for my kids, and I'm not stressed out that I'm going to the banks or putting it on a Klarna or a credit card and paying for it later and
Taking a HELOC.
trying to figure out how I'm going to provide later. And so you're all as anytime you're hearing us, you're at a fork in the road. You know, if you're listening to learn, that's awesome. Keep learning. That is the first thing, you're training. But the only way that you're going to make a change in your life is testing yourself, is booking that call, having that strategy call with Jeremy or myself, and really creating your path forward. So whether you're in shutdown right now and you want to prepare for the next time this happens, or you're hearing this and you're thinking, hey, I know that change is coming at some point. Let's be prepared.
So I think that's a great way to wrap it up. We invite you guys again, reach out. If you're uncertain, let's create certainty. Let's create certainty during volatility.
That's it. We want you to have certainty, control, and guarantees. That's what we have in our life. That's why we love doing this. And Jeremy, as always, you're already in banking.
You're just not the banker yet.
Be blessed, everyone. Looking forward to having a conversation with you.
Take care.
Thanks for joining us on Wealthwise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together,
We're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.